We're going to go to our traders right now to see what they can expect. Teddy Weisberg, do you expect anybody dipping a toe into these very rough waters as we head into the final hour of trade, and the Dow is now down 1,636 points?
Well, logic, Liz, would probably dictate just to get out of the way and let the tanks roll down the field and stay in your foxhole and not stick your head up, because no question that cash is king. But if you're long stocks and you own good stocks, basically, you just have to kind of tucker down and wait for the dust to settle. It will eventually. The fact is, we have seen more buy orders and sell orders for the last 2 or 3 days. But these are people that are just kind of nibbling around the edges. Clearly, this is a very difficult time for most investors.
Yeah, I not today, though. We probably might not see it again. We still have about 52 minutes before the final hour of trade. Bob Iaccino, you're at the CME. First, tell me about the flows and what you're seeing. We do have crude down. And can we bring up some U.S. Treasuries? I'm not sure we can, but the 10-year yield, this is what is a little disconcerting. And we're going to ask Stifel CEO Ron Kruszewski in just a minute about this. Normally, we would see the flight to quality and yields dropping. Treasury yields are rising. I'm wondering if you're seeing people selling treasuries to raise cash?
Well, hey, Liz, what I can tell you that I'm hearing is that Treasuries may be letting us know that some of the things that the Fed is doing, some of the things that federal governments are doing around the world might actually be starting to soothe the bond market a little bit. And the reason I say that is because you're looking at yields, which led this. If you go back to when we were in a huge stock market rally 3 months ago, yields were already falling. Commodities were already getting hit. So they're also going to lead on the way back out of this. All we are with the stock market now, as much as it's important that we're approaching bear market territory with the S&P, we're in it with the Dow, is that we're where we were in February of last year. So if you can imagine that from February of last year till now, if all we did was go sideways, would it be such a concern? Now, I understand it looks different because we were up and we fell, but that's really all it is. Toward the end of a historic bull market, we're sideways.
Okay, gentlemen, thank you. And we do have so much.